Hello and welcome to this week's edition of Tax in 10 with me, Rachel de Souza, and Andrew Robbins. We're both tax partners in RSM's London office and have a wealth of experience in dealing with a wide range of private client matters. Your feedback is valuable to us, so do keep it coming, especially if you have thoughts on any topics you would like us to cover. It's been reported recently that Boris Johnson is consulting with business leaders about the UK becoming more like Singapore. We thought it would be interesting to delve into what this means from a tax perspective and whether it is a possible template for the future structure of the UK's tax system, which many think needs to be overhauled. We do raise that tax is only one part of the Singapore solution, and the other part is regulatory requirements, which forms part of the overall discussion. We're not going to talk about the regulatory side of things because we're not qualified to talk about it, so do bear in mind we're just referring to the tax elements today. So with that in mind, Andrew, where's our starting point?
Well, I think the obvious thing for us to do is to start by looking at how Singapore taxes its residents and companies to give ourselves sort of a benchmark to compare the UK to. Now, Rachel, amazingly, I'm not an expert on Singapore tax.
You surprise me.
I know. Sadly, this is the one gap in my knowledge.
Oh, just one? Okay.
However, with the assistance of Mr. and Mrs. Wikipedia, I am happy to mansplain the Singapore tax system to you.
Go on then.
So, the maximum income tax rate for individuals in Singapore is 22%, and it's actually lower than that for lower income levels. There's a 17% corporate tax rate, and Singapore also has a goods and services tax, which is basically VAT, at a flat rate of 7%. So if you compare that to the UK, the UK, of course, charges VAT at 20% compared to that 7% rate. We have corporate tax in the UK at 19% at the moment. And in fact, if you remember, the UK tax rate was supposed to have reduced to 17% last year for corporation tax, but the PM changed his mind and said that changing that reduction would create £6 billion more money to be spent on the NHS, which in hindsight was probably a good move, I think.
Yes.
And then finally for individuals, well, I mentioned the Singapore income tax rate. I didn't talk about inheritance tax or capital gains tax because Singapore doesn't have inheritance tax or capital gains tax. So Singapore only taxes Singapore source income at that top rate of 22% compared to UK rates up to 45%. So basically, you know, what's not to like?
I mean, that sounds amazing. Shouldn't we all be rushing off down to Singapore, assuming the borders are open? However, life is not as simple as that. There's a few gaping holes, I think, in your analysis there. And particularly, we haven't talked about what we might term the Singapore equivalent of national insurance contributions. So again, what we've discovered is that on top of the income tax rate, which does appear to be, you know, relatively low in comparison to the UK's rate, but employees are required to pay up to 10.5% of earnings for medical contributions. And there's even more if you're under 55. You also have to contribute 20% of your earnings into a health savings scheme. And this in itself is matched by employer contributions of 17%. So when you take all of those extra deductions into account, the 22% income tax rate is now looking like something like total deductions of around 50% from my earnings. And therefore, we're actually getting into very, very similar territory as to the level of deductions that I have here in the UK when we take into account both income tax and national insurance contributions. So I think we can say that there's a little bit of care needed to be taken over looking at the headline rate in itself. And Singapore taxes may not quite be the low tax environment that they appear at first glance.
I think also, actually, even with that, the fact that things are not quite as good as they appear to be on the surface, if you look at it, the Singapore system does require some very significant sort of decisions to be made about where money raised by taxes is actually spent. Just to take my favourite example, let's talk about poisoned shrimps. Singapore has a conscript military. So as when you hit your early 20s, you have a period of 2 years obligatory military service. But the focus of the Singapore military is heavily defence and deterrence. So Singapore is not in the business of sort of projecting a military presence outside of the country. Mm-hmm. This is called the poison shrimp approach, because the idea is if you're a foreign power and you swallow up Singapore, the Singapore defence forces that you've just gobbled down are going to act as a resistance through the company and give you a very bad case of indigestion. Now, in comparison, of course, firstly, the UK doesn't have a conscript military. It's purely a volunteer service. But the military is a big part of the UK's global sort of diplomatic presence. It's a very conscious decision of the UK under all forms of government that we project military power on a global basis. And if we wanted to row back from that and save ourselves a lot of money, we would really fundamentally have to rethink the UK's place in the world. I'd also say that for most people who are, in the wonderful phrase, ordinary working families, reiterating your point, the tax burden in Singapore compared to the UK is probably not going to feel that different. The people who really benefit from a personal point of view from the Singapore tax system are either people who aren't earning a salary, so people who are living in Singapore but not working there, or people who are wealthy enough so that they can arrange their investments so that they have income generated outside the country. And I think in that limited sense, there's actually quite a lot of justice in calling Singapore a tax haven, because you can live in Singapore and pay no tax there at all, so long as you're not kind of economically active in the country. I know the UK has its own non-dom system, which has some similar effects, but the Singapore version, I think, does go quite a lot further.
So if we did go down that road to make the UK more like Singapore, over time, that could actually lead to the UK being less of a player on the world stage because our military capacity will have decreased. And likely then, from what I'm hearing from you, we won't be spending, governments won't be spending money on social and cultural activities. And therefore, overall, the UK would be a less attractive place for foreigners to relocate to. And that would apply whether we're talking about wealthy individuals or not. So, depriving the UK of intellectuals and academics and so on, as well as just the pure wealthy individuals.
I think that's probably true. I mean, clearly Singapore is a fantastic place to go if you're wealthy and you don't want to pay any tax. And you could turn the UK into that sort of environment by tweaking current non-dom rules. But that wider, broader sense of, as you say, scientists and artists and so on. People are not necessarily mega earners, but who bring a lot of wider social, commercial benefit to the UK. All of the intangible things that makes the UK attractive might be chipped away if you fundamentally took a lot out of the tax system and therefore weren't able to support those things.
Yes, I agree. And just as a reminder, of course, we are ignoring the other part of the Singapore system being the light touch on regulations. So some of these disadvantages that we've talked about would likely be offset by having less red tape, but that would mean potentially fewer rights for workers and so on. And whether those are a good thing or a bad thing is a whole nother conversation, which I don't think we need to get into right now.
So I think that's probably a good point to finish that. As ever, we always finish off with a bit at the end for our recommendation. And I think, Rachel, it's about time you did one of these. So what have you got for me?
Thanks, Andrew. Well, I do have one, actually. I have a book for everyone. I've just finished reading it, and it's called The Midnight Library, and it's by an author called Matt Haig. That's Haigh. He has written a number of books, so people might be familiar with him. But this particular one is exploring through somebody who has tried to take their own life, but bear with me, parallel lives that they could have lived. So would they have a better life if they were a rock star? Would they have a better life if they were living in Singapore in a tax haven? And it's just exploring all the different things that could happen to you in all these parallel lives, which does make it's quite thought-provoking, because it makes you think, you know, we all think, don't we, oh, I'd love to just be lying on that beach in the Maldives and living there, the sun's out, it's really easy. But it just brings together some of the perhaps disadvantages that we don't always think about. And then of course it brings the story round. This isn't a spoiler, but it does have a happy ending, and I always like a happy ending. so that's it from me. Midnight Library by Matt Haig.
Cool.
Thank you all for listening. As we always say, do let us have your comments or feedback, or indeed any suggestions for our bit at the end. We can be contacted on andrew.robbins@rsmuk.com and rachel.d'souza@rsmuk.com. Thanks very much for now.
Thanks a lot. Bye.